Hey guys, welcome to the video. Today we're going to be talking about when to sell a stock. I have three different points to cover for today. Let's get into point number one. Number one is if you need the cash to buy something. So why do we sell? Why do we invest in stocks? It's to increase the amount of cash that you have. And what do you want to do with the cash? Obviously, you want to spend it on something or you want to buy something. So if you're at a point in your life where you want to buy something large, like maybe like a new house or a car, maybe you want to go on vacation, you want to get a boat, or maybe you want to put a kid through college, or maybe there was some unexpected emergency that came up and you just need the cash right now to help like fix that situation. Then it would be a good idea to sell that stock and use that money for whatever it is that you need it for. So that's number one. Number two is to sell some of your losers, especially if you sold a winner. So this ties back to number one. So if you did sell a winner to buy something, you could sell some of your losers to offset that capital gains tax. So for capital gains, let me get a little more into that. Little more. Let me give you guys a little more detail about the capital gains tax. So for capital gains tax, the way it works is you have your short-term capital gains and long-term capital gains. So short-term capital gains, that's like if you held the stock for like less than a year. Long-term is more than a year. So let's do an example. Let's say you have two stocks, one winner, one loser, and these were both held for more than 1 year. So long-term capital gains. The winner, that is making like $100 profit. The stock increased by $100, so if you did sell it, you'd get $100 profit. And then the loser, let's call for this example, all of the losers, you were losing money, not necessarily losing to the market, but you're selling it at a loss, so you're losing money. So the loser that you had, let's say you lost $20 on that. So you had the $100 profit and then the $20 loss. You combine those together, that gives you a total gain of $80. So that's another situation where you want to sell. You would sell some of your losers to offset your capital gains, reduce that capital gains from $100 to $80. That way you get lower tax rate on that. And that's for both of them being the long term. You could do the same situation if they were both short term. If you sold a winner that you held for not 1 year, less than 1 year, you would also sell a loser that you held for less than 1 year. But the thing, one situation where I'm pretty sure it will not work is if you had a winner that you held for more than 1 year and you tried to lower that capital gain by selling a loser that you held for less than 1 year. So same if it was the opposite. If you had a winner that you held for less than 1 year, but you had a loser that you held for more than 1 year, if you tried to reduce your capital gains that way, it won't work because the amount of time you held each stock for, it was different. So you want to make sure that they were both held for either the long term, more than 1 year, or the short term, less than 1 year. All right, that was number two. And the last one, number three, is if you're in a situation where you cannot add more cash to your account, but you want to buy another company. So let's say for whatever reason you're stuck with like $5,000 in your portfolio, and you cannot add more cash to your portfolio for the foreseeable future. And maybe there's this company that IPO'd a few months ago, and you really want to invest in it, and you're right now you think that this company is going to outperform the S&P 500 and it's going to outperform one of your current holdings. So let's say like you would look at your current holdings and you would think to yourself, out of these companies that I have, which one will give me the worst performance? What do you think will give you the worst performance? And then you look at that company, you would sell maybe some of the shares or maybe all of it if you want. I would personally say you sell some of the shares. I wouldn't want to sell everything, but sell at least some of those shares and then use the cash from that to invest in the other company that you want to get. So that's another situation where you would sell some of the stocks. So yeah, those are the 3 points, numbers one, two, and three. Next slide. final notes. So if you don't know, my goal is to outperform the SPDR, which is the S&P 500. You can check out the Google link sheet to that in the description below. The Google links sheet should have a list of my stock picks, and it compares them to the SPDR's performance, so I can tell if I beat the market or not. And also, if you want, you can check out the discussion tab right here on the YouTube channel. Just click discussion and then sort by newest first. That way you can see the newest comment at the top. All right, that's it for today's video, and I'll see you guys in the next one. See ya.